Welcome to TradeTheMBI.com. This is John. This reports for the 11th of March, and we're getting close to the Ides of March. We always know that Caesar's going to be injured during that time period, so let's see if it plays out in the market. We can see short interest rising here. Finally, a decent move. Last time we had it right back there. It gave us a little bit of a dip back to the MBI ABM yellow inputs right there. A little bit of a fade off from the other day, and this is not surprising. We've sort of exhausted that run of the new fund money coming in that's pushed things up. Interesting, we're looking at a potential rejection of cyan to green on the DOC. That would definitely be one of the more negative signs, particularly since we're at higher highs on lower shakeout. But as long as the histogram is positive and continuing to move up, you're likely just going to hit those supports and continue to bounce on it. The varied readings from the economy. Of course, you had the unemployment numbers and bizarre twist. They revised downward the previous months, gave a ridiculously high number, and they'll probably do the same thing, and they'll continue to do that the rest of the year. So the print looks good, but then they go back and revise it lower. And then, of course, we see that at the end of the day, the reality is that most of the new jobs are coming to migrants and that at much lower wages and part-time. So when you look into the depth of it, it's not so pretty. And the market likes that, and in fact, because it just means that the Fed's seeing that as well, and they know that they're going to have to loosen up at some point. You can only do so, though, if oil continues to be kind. And there's no guarantee on that, especially with the continued crisis in the Gulf, with the rebel attacks on ships and that, and how much supply disruption that creates. Still an unknown. NQ is faring far worse in the situation. That's just because it had much greater run up. Back to 76% and a much stronger move from MBI White from a short standpoint. And you have the magenta below 25. I would expect more weakness. And given those readings, I would expect that the 76 won't hold in that particular case. So that would put added pressure on the S&P as well. So it'll be an interesting one to follow. Treasury still out of line, expecting the Fed to ease. And that is a support for the market because it puts pressure back to go into equities over being in treasuries where you're getting a subpar yield to what the current inflation rate is. And when we look at oil, there's no change here. The fact that it's held below the 80 is positive. Still way too high, though, relative to seeing any kind of even price modification as far as just stabilizing, but even to prevent further rate increases, you would have to see a significant drop in oil in order to justify being able to cut rates, and we're not seeing that. That's still counter to what the narrative is, and everyone believes that the euro somehow is going to benefit from all this because the Fed will have to cut, and that will ease the disparity between the euro and the dollar. But again, any rise in oil, and there's just no justification for euro where it is even at this point, but they're always going to play to the counter side of it simply because everyone has been net shorted. This is a clear indication of what you can expect going forward. The gold bugs, as they call them, but we've been bullish gold for quite some time. Every time it's dipped, it's been an opportunity, and this was no surprise at all. In fact, what was the surprise was is that they were able to keep it so low for so long, really, because there's just no question that commodities have to absorb this unsustainable debt cycle that's going, and you're seeing it right here when it comes to Bitcoin and that exploding from what we were liking all the way down here in the 30s. We had a brief dip where they had the liquidations of course they got that wrong. What a surprise down there for the FTX shareholders. They would have been better off just holding on to it, and they would have seen probably a complete restoration of their equity position. But no, they got out way too soon, and of course lost out on the huge gain prior to the halving that's coming up in another month. And you just combine this with the fact that the reality is that you can see the problem from the primary fiat currency, the debt sustainability becoming impossible to figure is going to be supportable in a very short period of time. I mean, we're talking months over years. It's a bizarre situation. I don't even know what they're thinking, and there's just no attempt to realize it. So there's got to be some other scenario that they're intending to play, either with a digital currency or what have you, and that's just strange. But ETH way outperforming Bitcoin in this particular stage, but both doing incredibly well, and I think that's just going to be the case broadly. Particularly as some of the utilization improves in that. And it's just a narrative that we've been talking about. It doesn't change the fact there's still plenty of great opportunities within the overall market in the regular fiat currencies. Short signal from the peak here, pretty straightforward, led to the move, and we're continuing that when we hit the 50% MBI white spike, leading to the next run lower. And that's what we're seeing in pre-market action right now. We're at the lows, actually making new ones right at this moment. When we go back to Friday's action, you can see that early morning boost was unsustainable, and the narrative was just negative the rest of the day. And this is just going to be a reality as we start to see, problem areas. You have Apple with difficulties, and some of these others are going to start having to justify the valuations. You look at NVIDIA and some of these things with the amount of value increase relative to significant changes in actual sales and that. I mean, this is all a bet on AI. The parallels to the 2000 dot-com bubble and that are quite staggering, and I think that it really presents itself as an interesting narrative as you continue to see just this countless resources being applied into equities, and that there's going to be a very difficult time if selling begins to exit. And this is why you're seeing just a massive increase in the amount of option plays. So from that standpoint, I would say much more sophisticated traders out there than there used to be, and certainly presents a lot of options within the play. But that also creates big gamma changes when it comes to dealers having to buy actual stocks versus their option holdings in that, and leads to far more what I would call manipulation, where expectations are not met simply because you have to trade against the crowd, and that's the only way to prevent having your hat handed to you. So a lot of complicated things. I did want to point out a little interesting detail. I had some questions on it when it comes to configuring of some of the indicators. When it comes to that, you just right click them, edit. And in this particular case, it was a question about the histogram, and you just go to scaling. Style. And you just white histo, and you make sure it's clicked the histogram instead of a line. Same thing applies with the extreme histogram, pretty straightforward. You just edit, and you go to the style, and right there you have it on histogram. And in this case, it would be the extreme part. And that will pretty much make a pretty straightforward look on this. And if anyone needs a workspace or just even a chart that you can take one of the simple ones and copy, you can always let me know, and I'll just send it out to you, because then you'd be looking at exactly the same screens that I do, for those that want to have that configuration. As always, though, anything relevant, I will certainly put on the Skype chat. Have a good one. Trade well.